How you doing, everybody? Construction loans. What does it take to get one? Okay, so we're talking about construction loans today. Not going to get into too much crazy detail, but basically, a construction loan is a loan that will give you money to do a construction, construct a home. So it's perfect for people that maybe have a piece of land that they already own or want to own, and then they want to build a house on it and don't have the cash to finance that out of pocket and need a loan for it. So these loans are fairly complex loans compared to the average type of loan. There's a lot more required, but it can be done. Basically, the lender is going to look at the current state of the property and what it's going to look like and be worth once the construction is done. And based on those two figures, it's going to tell you how much you need to bring out of pocket up front, out of pocket down payment. Um, that's called loan to cost, based on how much it's going to cost to do everything. And then they're also going to look at the future value of the property. What's the property going to be worth once all the construction is done, once the house is there and everything? So that's called loan to value, loan to future value. Anyway, without getting too complicated, that's how they look at it. And based on those numbers, they're going to look at, okay, how much does the borrower need to have up front in order to start this process, sort of skin in the game, so to speak. Um, what you typically need to get a construction loan are, and I'm not going to get into too much detail here because it can get pretty involved, but what you want is you're going to need to know how much it's going to cost to do everything you want to do. So you got to figure in how much is it going to cost to get your architectural plans done and approved with the city, so that you can get a permit to start building. How much is it going to cost to do all the construction? You're going to need a construction bid. Usually you need a cost breakdown and a bill of materials from a licensed general contractor that's going to do all the work, so that the bank knows how much it's going to cost to do everything. They're also going to want an appraisal done on the property. They're going to appraise it and they're going to give it an as is value and an after improved value, meaning what is it worth in its current state and what will it be worth after everything is all said and done and everything's constructed. And the other thing you're going to want to probably get involved with is you're going to have to get some stuff from the city. You'll probably have to get permits and so forth. Um, most construction loan lenders will want to make sure that you already have your permits and your plans approved by the city for what you want to build that they're going to lend you money on. So you're probably going to have a little bit of investment out of pocket. You're going to have to pay for, getting some plans done and approved with the city and getting any entitlements that you might need to get done with the city. Entitlements are things like a hookup for, your utilities and stuff. If those hookups aren't already, if that infrastructure is not already in place at the, at or near where the land is. So if you don't have entitlements, then that kind of complicates the process because you got to get all those things, as well done. So, but assuming it's a lot that's ready to be built on, has all the entitlements, meaning it's already ready and set up to be hooked up to for utilities, water, power, electricity, all that stuff. And if you have the land or have the land, that you already own, and you have the contract, you have the plans, you have the contractor bid, I should say, the plans, you have the permits from the city, you know what the as is and future value is going to be, then you're pretty much ready to get a construction loan. And so you got to get all that stuff together for a lender, for them to review. And if you don't have it all together right at now, you're just kind of toying with the idea, and maybe you saw a piece of land for sale that kind of sparked your eye. Uh, there is some initial analysis that can be done to give you an idea of what the possibilities are, so that you have an idea of how much it would cost you upfront out of pocket to get this thing going. In some cases, if the numbers are really in your favor, you could potentially get a construction loan with very little out of your own pocket up front. When I say very little, I'm meaning maybe 10, 15, 20, 10,000, to get the plans approved and, get the permits issued by the city. But most likely it's going to be more than that because, most of the time your numbers aren't going to, be that sweet. But anyway, you can eventually get the construction loan, and you can, even if the numbers work out in your favor, possibly get the loan to cover the interest payments that are going to be due to the bank that gives you the construction loan during the construction period while they're building the house or the property or whatever. Otherwise, you're going to have to, budget for having to make those interest payments to the bank while construction is happening, because they're going to be owed interest from day one, from the time they lend you the money. So, in a nutshell, that's how a construction loan works. And they're going to divvy the money to the contractor in phases. Usually they set up certain milestones of the construction process where you have to complete a certain milestone. For example, the foundation has to be laid and signed off by the city inspector before they'll release that next amount of funds from the construction loan to the contractor. So usually don't give the contractor all the money up front, because then the contractors just go to Vegas and spend all the money, and then there goes your house that you were going to build. There's no more money. The contractor took it. But no, they'll divvy it out, the money, to the contractor in phases as the work is getting done. Logical milestones that have to be met before the next batch or round of funds can be released to the contractor to fund the next phase of the project, all the way up until completion. So anyway, I hope I didn't give you too much information, but that's in a nutshell how a construction loan works. You still have to qualify for the loan. You still have to have good, adequate credit history, adequate credit profile, sufficient income to prove that you can make the payments, to the bank during the whole time the construction loan is out, and so forth. And then, so that's still going to be just like any other loan. You have to qualify. And then once the construction is done and you get what's called your certificate of occupancy from the city, meaning that they've blessed the property and somebody can move in, then you're either going to have to refinance and pay off that construction loan with a permanent loan, unless the loan you got initially was what's called a construction to perm loan, where it automatically converts to a permanent financing loan, and you don't need to refinance once the construction is done. So anyway, I've probably said too much, but anyway, just wanted to give you an idea of what the possibilities are for construction financing. So if you have any questions, you want to talk about this some more, be happy to talk with you. Give us a call. Ask for me, Martin Mesa, or whoever your loan officer is here at Rate One Financial, or call your local lender and talk to them about possibilities for construction lending. All right, take care.